Okay, good afternoon everybody and welcome to this edition of Ask the Experts. My name is Capolingua. I'm the market analyst over here at Think Markets, and it is a pleasure to be with you once again to really throw over to you, and I'll have a look at anything in your portfolio you'd like me to look at or anything you're thinking of adding to that portfolio. Over to you. I've got a bunch of items already coming through. Let's have a quick look at the ASX200. Click on that one and we'll go over here. This is the chart that you see on Ausbiz all of the time, and it's it's literally the one I copy and paste and send to them, and it's got all the various moving averages that I use. If you're not sure what moving averages I use, so certainly happy to share it with you here. And look, they're just the moving averages I've found over many years that tend to work the best, tend to summarize the underlying price action the best, to give me an idea of what the underlying trends are. But as a bonus, I've found over the years that they also tend to act as support and resistance as well. So initially I started using moving averages to tell me what the underlying trend is. A very quick way of one look what the trend is apart, instead of going through the price action, working out peaks and troughs. So that's a great feature. But I also found, as I started to use certain moving averages, that we can see that certain moving averages tend to support the price. And we'd see this light green zone here supporting the price on the way up. And incidentally, what I wanted to talk to you about today, resisting the price after we've fallen beneath it. And that is a major concern for me right now with the Australian market. We also find that in the longer term, we have other moving averages with longer durations that tend to perform the same function, but in a much bigger picture sense. So the shorter term moving averages I like to use are the 21 and 34 EMAs, and then longer term I go out to 144 and 233. And as I said, we can talk about some of those Fibonacci numbers, pure coincidence perhaps, but they're just the ones I tend to find to work the best. So we are a little bit concerned here that once we have broken through that short-term dynamic support zone, it is now like clockwork now. Look at this, once and twice acting as resistance, and as happy as you might have felt on this day here that we were going to retain those all-time highs, this invisible hand, it seems, acting at the moving averages for whatever reason, pushes the price down again, and lo and behold, here we are. So what it gives us is, I think, is a really clear-cut line in the sand as to when the bull market will resume, and for how long perhaps this mini correction will continue for. Whilst we're below that pink zone, we're in a correction phase. If we can close above it, then we're probably out of that phase and can go up and make new highs. And of course, we're not going to discuss at this stage all of the fundamental drivers, because we'd be here for hours on that. The most likely path on the technicals is probably a retest of that dark green zone, which we saw again, the invisible hand acting to push prices back up from that 71.91, which coincidentally was also a pretty key static support zone here around 71.73 and 72.05. As this zone rises, so too will the bottom of the next dip perhaps. So we're probably looking at just above 7200 as the next key level to the downside, which could act as support. So perhaps with that as the backdrop, we start covering some of these suggestions here on the shares that we're looking at today. The first one comes from John. We've got Dubber, which, John, you've been in enough of these now probably to start to do your own analysis on this and be able to start to make some decisions as to how confident you are that this uptrend is sustainable. And as much as we can like the stock, and I think this is a very good stock, nothing goes up in a straight line forever, and eventually we end up in a situation where things correct, if only because they're dragged down by the gravity of the broader market, and perhaps that's the scenario we're facing here. Let me just make one adjustment on the screen you can't see, and like magic, we'll see the name of the company appear on that side. So, John, I think you're expecting me to say that overall the trend is very, very strong, but we have some problems here. We have moved beneath those moving averages, which, like clockwork, the invisible hand, they have acted as support. Now that we're beneath them, they tend to resist prices back up to the upside, and that is a problem. If we're looking at the price action also, we have moved from very consistent and prolonged period of high peaks and high troughs into lower peaks and lower troughs. So I'll let you draw your own conclusions on that, John, based upon what you know about my views on technical analysis. But I would say that you don't have to be all in and all out of a stock. So, I like to use this idea of thirds. So getting in thirds. So not putting all my money in at once, but as the trend progresses and continues to confirm my initial expectations, putting more money in, but also as the trend starts to change to the downside, taking money out in blocks as well. So if it does push back up and our fears are unfounded, we've still got a position there as well. So I think you're probably in a similar page to me, John, on that one where it's looking a bit shaky in the short term, isn't it? Okay, Archer Minerals is the next one. I know this has been getting some legs on AusBiz from Henry Jennings. I think it was his pick for his life-changing stocks, and it did very well after he did pick that. Where are we now? Look, that light green zone is still supporting prices. I think that's very encouraging. Long-term trend is definitely up. I am concerned, however, about this sort of the volume and the volatility that's coming in when you match it up with the candle. So volume and volatility in itself is not necessarily a bad thing when it's accompanied by by candles that look like this, because that's just telling you that there's lots of interest in the stock, and we are ploughing through supply. So high volume tells you, yes, there's lots of demand. How do we know there's lots of demand? Well, look at the white candle, the stock went up. But it also tells you there's lots of supply. Okay, so high volume is buying and selling. Okay, so yes, there were lots of people selling on that day, but there were probably people, who got in at 60 cents and were taking profit. So, the demand is resetting, I guess, where the base of this is. And quite often we see, but when bases are set around 150, 160 like that, a fairly big round number there at 150, the next logical target, and I can't, I'm not making this stuff up, everyone. The next logical target is literally double that. So no surprise for me that if we spent that basing time around 150, that we would see this thing top out at $3. How about that? And it did. $3, obviously, another big round number. I'm concerned that the volume and volatility is accompanied by these black candles. And long story short, I think, again, if I had it, I'd be exercising some caution here and taking a bit of profit on it, but not selling the whole batch because that long-term trend is still up. And, it's a stock that has exhibited great volatility to the upside, so why wouldn't you just give it a little bit more of a go, I think. But, this here and this here, and the fact that this peak was lower than this peak, would lead me to believe that it's not all true believers in this stock. There is some active supply out there in the market. If you need anything more specific than that, John, let me know. Let's move on. This is Lee. We've got XRF, which is the stairway to heaven. How good is this thing? XRF Scientific, and I don't think this one's come up in Ask the Experts before. And I don't know why. I haven't seen this one. Maybe it's missed on some of my liquidity filters, but that looks amazing. And unlike Archer, unlike Dubber, we're not seeing any supply in the market at this point in time to suggest that people are panicked about what's happening in China or with interest rates or the Fed. They are pretty happy to hold this thing in the face of some broader market nervousness. And that's impressive for me. So look, if I had this one, I wouldn't be selling a share. I'd be holding on to it. And if I didn't have it, I'd be looking to buy it on pullbacks into that light green zone, because we know that tends to be a high probability area where prices turn around. I'm really happy with that one for Lee. So I hope you've got it, Lee. I hope you're on that one. Okay, let's have a look at PPL. Okay, so PPL. Now, I'm writing for Canstar at the moment an article about three tech stocks to watch out for, and we do have that webinar next week on Tuesday, and this is one of the stocks I'm going to put in. Now, frustratingly, it's gone up from below 5 cents to now over 6 cents in the meantime. In between me finding it and researching it and liking it to actually me being able to put those articles and content out there for everyone. But, I still think it's going to be really good. So there actually is a real business behind this technology stock. They do marketing data, so online digital advertising data, collecting from consumers like us and then selling that data to advertisers and marketing agencies. They've got a software as a service platform that helps end users collate that information, use that information. They also will design, execute and maintain advertising campaigns for your digital campaigns. They are cash flow positive. They're making money. It's a very interesting business. And looking at the chart, I think maybe the market just woke up. They've had a little bit of press recently, and the market's just waking up to the fact that there's a really good business there. So if I had that one, Lee, I would definitely hang on to it. If you don't have it, I think it's gone up frustratingly enough that I think you have to wait for pullbacks now. And we could see that light green zone probably kick in around about 5.2, 5.3, which is where I think you could buy it on a pullback. But there's a heads up. I'll be covering it on Tuesday, next Tuesday in our 3 technology stocks webinar. I might as well give you guys the other two that I'm looking at. CPU, which you can see obviously they're doing well on the chart, so that's the first reason why I like it. But this one is highly leveraged to rising interest rates, and I might very quickly, because it's worth having a look, just if not for colour, and what's going to impact the market over the next few weeks, I believe, is this chart here, which of course is it's not that one. That's the Australian bond yields, which are rising, yes, but the US bond yields had a big breakout through that 1.38 level. So I do think we're going to see higher rates going forward, and therefore I think CPU will benefit significantly from that. So typically when we've got technology stocks, they don't do well when rates are rising, but CPU is not one of those high growth, or growth is way out in the future stocks. It's been around for donkey's years, and it's already earning money. And basically, when a company pays a dividend, that dividend flushes through CPU's coffers, if only for a little while, before it hits shareholders' bank accounts, and they make a bit of margin in between, so they need those rates to pop back up again. CPU, and the other one is Atomos, which probably won't surprise anyone here. It's just a really good business. And it's got a nice chart there as well. So they're the 3 tech stocks we'll be doing on Tuesday. Sorry for going off on a tangent there, Lee, but hopefully it was constructive. TLG is the next one, Talga Group, which is one which I have followed in the past. Haven't looked at it for a while. Correct me if I'm wrong. Something to do with graphite, perhaps. Anonymous attendee. Maybe an anonymous attendee can give me a name, anonymous attendee. Look, I like it. It's been very, very quiet, but I think that might be about to change. It's one I looked at, I think, over here a few days ago. It hasn't done a whole lot since then, but I still think it's building in a pretty lousy market. I think it's done pretty well over the last few days. Look, this one's on watch for me. I think I'm actually happy just to buy this as a bit of a spec in, again, using that 1/3, 1/3, 1/3 rule, trying to pick up a third, if not around the current levels, but on any pullbacks into 150 on the basis that this breakout will occur. And the break needs to happen through this level here. And I'll give you a number. So let's go there and there, which is 163. So break at 163. I think this one's off again, and it could do anything. It's got a great base pattern, which I like to see. So after all of this excitement through here, what you end up is with a lot of hype and a lot of excess and a lot of that move, which probably wouldn't have happened if people were just being sensible about things. And what that does is it creates a lot of people who got stuck in at the top. And as prices come down, they really regret that decision. And it takes them many, many months to wash out of the stock, to take their hit, learn their lesson and go move on. But what's important is that the demand from the true believers, the real long-term players here, is still there, and they're accumulating that stock, and that'll manifest itself as in this light green zone holding. So many times we've seen stocks that flare up and they capture the imagination of the market, and then they flame out just as quickly and they crack beneath these long-term zones. But the ones that hold this base, they're the ones that tell you that there's significant latent demand in the system. We're just washing through all of these, all this hot money that probably shouldn't have been buying at that level. Once we get through that supply, if the demand is still there, and I think it is, because we're starting to move back into these short-term uptrends here, and the long-term dynamic trend zone is really holding well with some nice candles, then that demand takes over, and then it captures the market's imagination and it goes again. So look, I like Talga. I'm happy to part enter now with a look to put some more in if we break through 163. And one that this reminds me of, which I like very much, is Novonix. And we looked at it here, around here, maybe it was even after this little pop here in Ask the Experts previously, and we talked about this exact pattern where people get really excited, then we wash out, and we have this long, support zone there, this basing pattern of which to launch the next move. So I'm not saying that that's a lock for Talga, that we're going to see a Novonix type move, but it's a similar pattern that I think you need to be aware of. And keep looking out for. So that's for anonymous attendee. Anonymous attendee. They've got a few posts. I'm trying to find your name, anonymous attendee. Let's get on to the next one. The next one is for Lakshan, and he wants CHL, which is Camplify, and I must admit I haven't heard of this one, probably because it's too new for my scans to even pick it up. My scans need, they're technical scans, so they need long-term trends to be able to find them. And this one is a new listing. It doesn't have a long-term trend yet. That doesn't mean I panic and regret that my scan doesn't find them. It just means that, I'm happy to wait because there's plenty of other opportunities out there. But Lakshan, thank you for bringing this to my attention. I think it looks amazing. And I certainly will be doing some more research on this one because whilst I know nothing about the business, I do know that the people who do know about the business really, really like it. So much that they are falling over themselves to buy the stock. How do I know? Well, look at the chart. It keeps going up. But also they like it so much that for people who own the stock, they don't want to sell it. And even though it's gone up a lot, they still don't want to sell. So what does that tell you? It's gone up a lot. People still want to buy. It's gone up a lot. People don't want to sell. It tells you it's a great business. So thanks for bringing that to my attention. I'll certainly do some more work on it. If you want a buy, hold, and sell from me, I wouldn't be selling a share of this, and I'd be happy to buy it on pullbacks. I think you're going to get a little pullback into $3, and that'll probably be fine to buy. PBH is the next one, which is Pointsbet. This one, unfortunately, is not doing what Novonix did, and it's not doing what Talga is doing. It's actually slipped below its long-term trend zone, hasn't it? And that long-term trend zone, as so often is the case, has gone from acting as that dynamic support to now, unfortunately, acting as this resistance level. And we can again see these short-term trends and just how brutal they can be, how wonderful they can be on the way up, but then how disappointing and brutal and consistent they can be on the way down. I don't like this one, unfortunately, Lakshan. I'm pretty concerned. If I had it, well, I wouldn't have it for starters, because look at the chart. And if I had it, I'd be taking advantage of any rallies to sell. Look, I hope it goes up for you, but on the balance of probability, I don't think it will. And again, the way I use charts, everybody, I'm not Nostradamus here. I can't tell you what's going to happen in the future, and it's silly to think that anybody looking at a chart can do that. I'm just giving you balance of probability based upon my extensive experience in reading charts, and I would suggest to you that this one here on screen, based upon what we can see, is more likely to go down than up. Okay, A, D, and 8. This one looks pretty good. I'll probably put it in the dubber camp, where there's a lot to like about it on the chart, but we can see that it is starting to slip away a little bit here towards the ends and break below zones that should really act as support. And probably if it cracks beneath, and I'll give you a number here, then it's going to be in a little bit of trouble, and that low there, I would suggest anything below 973, and we're probably going to get a pullback into the 9 to 930 zone, and perhaps even as low as 9 into that dark green zone before you see the next bounce, and it could take a while for that to occur. So it could be one of those that falls into the camp for Hamid of maybe lightening some of the load that you have if you're making some profits on that. Would I buy it now? No, I cannot buy this one right now based upon what I can see. We have PTX, Okay, look, first pass, it looks very good. Short-term trends are very constructive. That light green zone is definitely supporting prices. Long-term trend looks very good as well. The price action is reasonable in that we are seeing high peaks and high troughs, but I'm not always a big fan of the overlap. So there's lots of overlap here. So clean price action is where when you make these high peaks and high troughs, the next trough is made at or above the last peak. Okay, and that's what I would classify as clean price action. So remember, when we break through those old peaks, those old points of supply, okay, they should act in the future as points of demand. So, an old point of supply should act as a point of demand in the future, okay? And we won't go into the reasons because we don't have enough time, but that's what should happen. If we see more of an overlap, so something which I call, so that's clean price action. This, for no other reason, it's the opposite of clean. I call it dirty price action, where we get this significant overlap. Yes, it's still going up, but the strength of the demand side of the market is not as pronounced. So that would be the only drawback here. 30, maybe we've got a bit of a pullback into 24, 25. Buy, hold or sell from me. I don't think it's a buy just yet. I might be interested on a pullback to the green zone with some nice white candles coming in before I would be prepared to buy. I don't think it's a sell either. And it's certainly not sell the whole position, but if you wanted to take some profits, maybe that's in the cards. But then trying to buy it back only a few cents lower, I'm not sure if that's worth it. So look, I think it's a hold with a watch for a pullback into 24, 25 and how it responds to that. But hang on to it for the time being. That's for Andreas from Warren. We've got RAC, which looks pretty good. Race Oncology, it's holding. I think it's holding here pretty well. We talked about dirty price action, and that's dirty price action right there. So, yes, it's bounced out of this long-term support zone, and that's a big tick. But it's not exactly setting the world on fire. But the market hasn't been great either. So, look, I think it's very good. I think I would definitely hold on to this. I can't see any reason to sell it just yet. We've moved back above the light green zone. We've got some really great candles, so I'm very encouraged by this candle, this candle, this candle, this candle, and this candle. In fact, even that candle there, in what is a pretty lousy market. If I had it, I would certainly hold it. I don't think I'm a buyer until I see some really nice candles, some really nice lower shadows or more white candles like this happening around that 350 level. That would entice me in for a part entry. Or if it was to break and close above 360, that would also get me quite interested as well. Because we're also seeing this nice big base pattern here too, aren't we? That's that base pattern we talked about after people got probably too excited back at the start of the year. Very, very interesting, Warren. I would definitely hold on to it. Maybe not just to buy it yet. LKE is the next one, which looks pretty good. Lots of black candles there that I'm concerned about. And in fact, there's a lot of black candles here, aren't there? There's probably too many black candles for me to get really excited about this one. But on the basis of the short and long-term trends, I think you'd be a holder, but I don't think I'm a buyer. I think I can find better opportunities out there than like resources, but it looks very interesting. It's held 50 really well over here. So I think I'm a pass on that. Look, I know the trends look great, Warren, but a little bit of a pass on that one just on those candles. NVX from our anonymous attendee again. I think this falls into the category of hold it. Would I be lightening the load? Let's do some work. Let's think about where our levels were. So certainly 2 was a level. So double that, you get 4. So yes, we saw 4 was a bit of a level. You're at 50% profit at 6. That's been a bit of a level. I think this still looks pretty good. I think I'd be selling some at 8, if only because we stopped at 4. But otherwise, I can't see why you wouldn't hang on to that. In a pretty terrible market, it's holding up very well. Not the greatest candle on this one here, but it didn't follow through today in a poor market. So 100% a holder on this. Would I be buying it? I think we're more on in the phase now of managing our exits rather than buying, because it's had a very good run. Not that I'm looking to exit just yet. 6 to 8, perhaps. But that's order of magnitude. Let's face it, it has run from 2, right? That's for our anonymous attendee. Would I buy it here? Well, we were buying it down here. So I think it's about managing exits now on what has been a very good trade. Coincidentally, Peter's got the next question. What are your thoughts on Novonix after their recent rise? Look, I mean, I did the fundamental workup on this, as you know, way back. I think it might have been August. I was on the call and I said, I love it. I want to buy it. And I said it was good value down there, but it's gone up 300%. I haven't looked at the valuation since then, Peter, so I can't comment on it, but I would suspect it's 1/3 as good as what it was when I first identified it. Okay, IGO. How are we going on time? Getting close. IGO, as much as I love this stock, the heart's got to take a back seat. I do like this stock, but the brain's saying that we are probably going to have a continued pullback into that $8 zone, simply because there's just so much negativity around at the moment with respect to China and commodities and commodity demand, and that economy slowing. Nickel prices are coming off the boil after looking amazing. Probably one of my most frustrating charts of 2021, I think, will go down as the nickel price, which broke to 7-year highs and on the weekly chart looked absolutely incredible, but now looks like it might take a bit more or require a bit more cooking. So I think IGO falls into that camp. I think you're going to see $8 on this one, 8.30 to 8.50. That's the green zone, and I think we're going to get there, unfortunately. For our anonymous attendee, you might want to give us your name next time, seeing as you're asking all the questions. Certainly give Think Markets a call and tell them that you'd like to transfer your entire ASX shareholdings over to Think Markets and take advantage of the fantastic platform, the cheapest CHESS-sponsored rate you can get, and all of our fantastic service, and of course my analysis. So anonymous attendee, don't be anonymous for too much longer. Orecobre, I think, is in the same boat as IGO, and again, as much as I love this stock, you can't love stocks, everyone. Don't fall in love with your stocks. The chart is the reality, and we can see how we've broken through the light green zone, which should act as support, and it was, but unfortunately now with this upper shadow here, disappointing, acting as resistance. And despite the fact that we are seeing lots of buying on the dip, maybe the dip is going to get a little bit more severe and probably into these static levels around 7 to 750, which coincidentally, and maybe not coincidentally, also coincides with that long-term trend zones. So maybe more of a pullback on Orecobre instead of the great performance it's had up to this point this year. This one's going to run over time, so if you do need to leave us, then thanks for joining us. Of course, Core Lithium, I still think it looks great, actually. I mean, there is some supply coming in at the end there, but it's in a pretty lousy market. But I like the candles. I like the price action. Yes, there's a lower peak here, but that's fairly normal for a stock like this. It's had a great run. Look, absolutely, I would hold it. I don't think there's enough in it there to make me feel concerned about it. At this stage, we can again see this wonderful base pattern, can't we? After markets go silly and crazy for things, this base pattern, long-term trend zone holds, and then we start to see the demand come in and the interest come back in. I'm absolutely a holder of this, and I'd need to see some really nice candles in the light green zone before I'm a buyer again, but I would certainly hold it. I don't think I want to sell that one just yet. PLS is the next one. This is for Grant. This one I'm a bit more concerned about. So I think this is more in the Orecobre camp. These guys are far closer to production. If I'm not mistaken, I can't remember if they're producing it or not. Whereas Core Lithium, I think, is much further away. So it tends to be the case that when markets turn around, the ones that are producing and making money tend to go down, and the ones that are still prospective tend to be a little bit insulated. I think this one's going to be in a bit of trouble here, Grant. If it breaks through $2, then in line with the pullback in some of those other big mineral stocks, we could see a pullback into 180 to 160. I think that the signs, the writing's on the wall here in terms of some of these pullbacks and the fact we're failing at some of these moving averages. So CXO is a hold. PLS, you might want to trim a little bit there in anticipation maybe of even just buying that back. So if you sold a third and look to buy a third back at 160, you're going to save yourself 40 cents on it. Yeah, it's up to you. It is always up to you, everybody. I'm just giving you my best guess. That's all it is. Uniti Wireless, I think, is fine. I think this little dip here, what was that, earnings or something? But yeah, look, I'm a happy holder there. Not sure if I'm buying, just because, you know, maybe we just want to wait and see how this market correction plays out. But definitely happy to hold that on the basis of the strength of those trends, and the strength of the candles. I mean, look how many white candles are in here. We talk about buy the dip. That's what buy the dip looks like. Those candles, absolutely amazing. It'd be interesting to see if we start to see those white candles come in around this light green zone. Maybe there is a case to buy it. That's also from Grant. I've got okay. We'll stop putting in new ones, otherwise you'll be disappointed, because I'm just going to work my way to the end of this list. HNR, Hannans. Okay. I think this one's been around forever. There you go. It has. Rings a bell. Finally found something, did they? Who's this one for? Anonymous attendee. Looks like they kicked over the correct rock in whichever desert they're stumbling around in, and there was something in that rock. Look, I don't know. If you've got it, hold it. There's nothing in there to suggest that you would sell it. Today's a great day. The volume's there. But yeah, you know, I mean, I can't look at this. It was nothing. It was nothing before it was something, and it may well be nothing again. It's one of those speckies that if you've got them, hold them. But it's not really my style to go and play those at this stage. ADO, I think, looks very good. Anteotech, in a better market, it probably would have kept going. I still think you held it. I can't see any reason why you'd sell it here. You know, the trends are turning back up. You know, it did get on the wrong side of that long-term trend zone. But, you know, I like this price action through here, bursting back through. The long-term trend zone went from resistance back to support. Short-term trends are turning up. Some nice candles in here. I totally expect we're going to have a little bit of a pullback into 25, and that's where you need to decide what to do with it. So you're not deciding what to do with it now. You're deciding what to do with it at 25. If we see black candles at 25, then I'd be concerned, because at 25 is where we should expect to see the support. So it becomes quite clear now. If you see the support there, so white candles and lower shadows, there's support there, and then it comes back into a buy on this turnaround play. If you don't see the support there, then I'd be very concerned. And we are. We'll have to, maybe we'll just save the rest for next time. I'm sorry about that, but I think we've gone over time, and we didn't even do any fundamental analysis today. So apologies if you didn't get your questions answered, but I will make note of those, and I will be sure to start off with that list for next time. Just a reminder that we do have some webinars coming up. I talked about the top 3 ASX technology stocks. Ask the Experts, of course, in another 2 weeks. That's where you register for them. If you're watching me on YouTube and you've liked what you've seen, please hit the thumbs up button. That gives us great feedback to keep doing them, or hit the subscribe to get notified of the next video release. Well, that's it for me today, everybody. Hopefully you got lots out of it. All the best for your trading. Until we catch up again. Bye-bye for now.